good. Let's go to one of the more conventional agricultural companies, and that is Deere Company, also known by their John Deere name. But Deere, of course, is the world's leading manufacturer of agricultural, turf, construction and forestry equipment in the sense of like tractors and back actors and all of that sort of stuff. Market capitalization $26.9 billion US dollars. Price to earnings ratio 16.92. Dividend yield of 2.85. It sort of battled a bit, you know, did well in 2007, 2008, tracks Caterpillar a little bit, slightly different. But I mean, the equipment itself is fantastic, right? These are the stuff that farmers love to.
I agree with you. This is a solid business, long term. You know, from a valuation perspective, also looking a little bit cheaper. It's 16 PE ratio. The dividend yield also very attractive. If you look at it in terms of the inflation in the US, so you're still above, you know, inflation from a dividend perspective. You're getting real returns there. So it does look quite nice. I think it does look attractive. I think if you look in terms of the price to book value as well, 3 times. So I think it's a good.
Because they're really a manufacturing company, right? So they buy in steel. They've got all these established plants around the world. It was one of the companies that invented the idea of sort of just-in-time manufacturing in the turn of the last century. They have a presence in all of those construction, farming and other related areas, graders, plows, tractors, harvesters. I mean, the complex harvesters that you see using now for the grain and maize manufacturing and harvesting. Forestry as well. I mean, that's not to be underestimated.
Even your sprays, I mean, it's becoming quite a big issue because remember, there's a massive mechanization of the agricultural sector.
Which is what you're saying. So, like, the only people that will survive is the highly productive, those that have all of the latest equipment that can basically manufacture agricultural commodities at a price which beats everyone else.
And also the seasons are becoming shorter in terms of the rain season. So if you're doing mechanization, you know, obviously it will take you 2 days or 3 days to be able to do 500 hectares. Whereas if you're going to use manual labor, unfortunately it's a mission.
It's going to be tough. Okay, share chart doesn't show much excitement, but I wouldn't be surprised. Well, I'm not surprised. That it's a 5-year chart. It's sort of drifting around. There's been a lot of work done, but at the same time, these are not easy times, and so people haven't really been investing heavily in capital equipment linked to anything that's related to commodities. I see, though, that Warren Buffett has got a 7% or thereabouts stake through Berkshire Hathaway in John Deere, so I suppose they like it. Hot or not?
Or if Mr. Buffett likes it, I think we have to like it. So it's about 16% down from their highs. So I think it will recover. I mean, this is a good, solid business. There's massive movement towards mechanization. So certainly I would accumulate.
Exactly.
So
and I mean, there's only 1/3 of their sales outside of the US and Canada. So there's plenty of scope for this to spread globally. It's not like they have the whole market to themselves. There's all sorts of other equipment manufacturers out there, but people who've got the money will go for the premium brand.
For quality, yes.
Okay, so we'll give it the thumbs up. Go hot there.